Each year, there are a few key changes that you need to know about that will directly affect your tax return, and this year is no different. In this video, I'm here to tell you about the key changes for the 24/25 tax returns. One thing that does change nearly every single year is the motor vehicle cents per kilometre rate. So this year, the rate is going up from 85 cents up to 88 cents. So let's have a look through here of an example. If you're claiming the maximum 5,000 kilometres, then that means your maximum claim is going to change from $4,250 to $4,400. So you're getting an extra claim of $150. So for those that are on the 32-cent tax bracket, this claim will give you an extra reduction in your tax of $1,408. Now, this might be slightly different to last year because of our tax rate changes, which I'll talk about later on in the video. Now, of course, you don't have to use the motor vehicle cents per kilometre method. There is also the logbook method. And remember, you can change these methods each year, but you want to pick which one works best for you. So what I normally say to people is keep all the data you need to be able to compare the two methods, and then of course pick the one that maximizes your claim. The next one that has changed is another rate, and it's the home office fixed hours rate. So this has gone from 67 cents up to 70 cents, and this one didn't actually change the prior year. So it is good to see it change. Would have liked to see it go a little bit higher, but it is what it is. So let's look at another example. For instance, if we've got someone who works 30 hours per week for 44 weeks a year, assuming they get a bit of time off, or 1,320 hours through the year. So their claim is going to go from $884.40 up to $924. So an increase there of $39.60. Now, what you want to remember is the fixed rate includes things that you can't then claim separately. So let's look at this list that the HU I've got here. So it includes home and mobile internet or data expenses, mobile and home phone usage expenses, electricity and gas for heating, cooling, and lighting, and stationary computer consumables such as printer, ink, and paper. So remember, if you're using the fixed rate method, you can't claim any of these things in addition to that. Now, there are other methods out there, such as the actual cost method, where you would then claim the actual cost of all of these items plus anything else that is home office related. Again, like the motor vehicle method, you can compare the two different methods, see what works best for you, put that into your return to help maximize your overall return. Another way that hopefully will help you maximize your return is to subscribe to my free email newsletter. I send out this newsletter every single week throughout the whole year to help you maximize your return. I put tax tips in there and other little bits and pieces that I've found useful across my financial journey. I'd love to see you join. The link is in the description of this video. But for now, let's get back into the video. The other big key area that's changed is the tax rates. Now, these changed from 1st of July 2024, so they've been in place for the whole year. So hopefully your employer updated their tax tables within their payroll system, or if they're modern and using a cloud-based system, it would have automatically updated. But hopefully they've got their withholding right for you throughout the year. This should mean that your withholding has been already adjusted. So you've already seen the benefits of these tax reductions throughout the year. So don't just expect a larger refund because the tax rates were cut, because you've actually already been seeing that each week. However, this does impact how your deductions impact your return. That is because the tax rate that your deductions are reducing could be different. So let's have a look at an example here of someone who earns $90,000 a year and they have $3,000 in deductions. And we're going to assume their situation was the exact same in 23/24 as it is in 24/25. Their tax withholding is perfect. They've got nothing else. So if all things were equal and they had no deductions, they would have got no refund and wouldn't have owed anything. But they do have those $3,000 of deductions. So let's have a look. They've gone and claimed those $3,000 this year. And their tax rate is going to be 30 cents plus the 2% Medicare levy, so 32 cents. So this is going to result in them getting a $960 refund. Now, last year when they did this, in the exact same situation, they claimed that $3,000, but their tax rate was 32.5 cents plus 2% Medicare levy, so 34.5 cents. So 2.5 cents difference in tax, which meant that their refund was $1,035. So we're talking a difference here of $75, even though the claim was the exact same. And that's just because your claims help you at your marginal tax rate where it falls into those deductions. So it's just something to be aware of, that if you've claimed the same amount as last year and you're in the same tax bracket, then the benefit might be slightly less than it was the year before. The brackets have also changed, so that is something else to be keeping aware of. If maybe previously you were at, say, 130, well, maybe you're now falling into that lower bracket, whereas last year when you were making those claims, it was a higher rate. So it is just something to be aware of if your refund is slightly lower than last year, even if everything else seems to have stayed the same. Now, there are only a few days left to end of financial year, which means you want to be ticking off those final few things. In this upcoming video, I go through a bit of a checklist of some of the key things that you should be doing before the clock strikes midnight on the 30th of June and flips over to July. I hope to see you over there.